Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's January 2nd, 2024. Happy New Year, one and all. Remember, if you're new to us, make sure you click subscribe on our YouTube channel. While you're there, go down below into the description area. Make sure you're signed up for our email distribution list, so that way you can be notified of whatever we post these videos, and you'll also see which stocks are giving you overbought and oversold cluster signals at the bottom of those emails. In addition to that, we're heavy users of Twitter or X. If you're not doing so already, my handle is @BrandonVanZ, and I would encourage you to follow me there. We really appreciate those of you that click like and repost as well. In addition to that, we have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's recap. And as you can see, it was quite an eventful day as we kicked off a new trading year. We've got the S&P 500 heat map here in front of us. And wow, very interesting to say the least. A day where I, as a dividend growth investor, felt a little bit better about things compared to the many days that I felt last year when we had pretty much the opposite of what we're seeing right here. In other words, today was a day where the Magnificent Seven got absolutely decimated. And at the same time, we had some of those boring areas of the market like utilities and healthcare and consumer staples and REITs up here today. So we didn't see a whole lot of those types of days last year. It'll be interesting to see if this kind of flips the switch towards a kind of a reversion to the mean type of a move in some of those key areas. You'll recall that it was a year ago when that exact thing happened, right? 2022, dividend stocks outperformed, and all those tech stocks had a lousy year. And then starting in January of last year, it reverted where dividend stocks started to underperform and the tech stocks started rallying furiously. And so it makes you wonder if here we go again. At the beginning of the year, are we going to see that unwind once again? Obviously, we're only one day into it, so we don't want to jump to conclusions, but it was a noteworthy day. This was not just a throwaway type of a day. There were some sizable moves out there. Let's get into it, starting with the big kahuna, Apple. As you can see, Apple was down 3.58% today. I think at one point it was actually down 4%. There was some company-specific news from a brokerage that came out, and we're expecting maybe some lighter iPhone sales than the market had been anticipating. So that's what partially provided that pressure. But I think it was just a day where tech was underwater to begin with, so that really didn't help in that regard. But you know, when you have the world's largest publicly traded company down 3.5%, you've got your work cut out for you in terms of having the market itself perform well. Today, the S&P 500 was down just over 0.5%, but there were actually more stocks up than down within the market, and that is your Apple and other mega cap stock effect. You'll notice that Microsoft was down today as well. They were down 1.38%, so not nearly as bad as Apple, but still easily outperforming or underperforming, I should say, the rest of the market. NVIDIA also had a challenging day to start off 2024. You can see NVIDIA down 2.73%. Moving along outside of the tech space into the other mega cap or Magnificent Seven stocks, I guess you'd call them. Google was down about 1% today. Meta, the parent of Facebook, was down 2%. And then down below here in the discretionary area, Amazon was down just over 1%. And then Tesla was the best performer amongst the Magnificent Seven today, but even it was down just barely. It was down 0.02%. So we had a day where all of the Magnificent Seven companies were lower, yet we have lots of green on the board. You can see most of the green kind of off to the right-hand side here, whereas kind of the left-hand side, we have a lot more red. The left-hand side is where we have this technology. So if you can kind of follow my mouse around here, you'll see that what I'm circling there is technology, that upper left kind of, I don't know if you'd call it a quadrant, maybe not quite, but point is tech is by far and away the most important sector in the U.S. stock market from a market cap perspective, and nearly all the tech stocks were down today. There was only a handful of green patches I see in there. FIS, which is a banking software company, was up 1.5% today. Maybe Jack Henry and Associates was up 0.77%. That looks like it's about it. FI, so Fiserv was up just barely 0.18%. 8%. But really, that's about it. You had a couple other random ones, like J-Bill was up just a touch, Corning was up just a touch, but they were few and far between. The vast majority of these tech stocks down, and not just down a little bit, down pretty tremendously. Broadcom down about 3%. Adobe down about 3%, Intuit down over 3%. Those were some of your biggest winners last year. Uber had a tough day as well, down 5%. Remember, a lot of people got enthusiastic about that company late last year as it was announced that they'll be added to the S&P 500. So if you had a tech-heavy portfolio, you were enthusiastic last year, but in the first day of 2024, you probably took a little bit more of a sting here today. You can also see that Boeing was down 3% today. I did see that there was some controversy with an airplane explosion over in Japan. I think that was more of an Airbus story, but maybe that was a little bit of pin action there with Boeing down today as well. We did see a number of the consumer discretionary stocks lower today, including some of those hot cruise stocks, right? The Royal Caribbean, Carnival Cruises, and Norwegian Cruises, all down considerably here today, anywhere between 6 and 9%. And those, similar to the Magnificent Seven stocks, were some of last year's biggest winners. So today definitely felt like it wasn't random as far as which stocks were up and which ones were down. It felt like the companies that did the best last year were exactly where the profit taking was taking place here today. And a lot of the companies that did the worst last year were where that money was flowing. Let's talk about some of those big movers to the upside now. What catches my eye is right in the upper right-hand corner, where we have a lot of those healthcare stocks. Stocks like Pfizer that had a horrible year last year, up 3% today. Amgen went to new all-time highs, up 3% here today. Bristol Myers was up nearly 3% today. Merck was up almost 4% today. Gilead up nearly 3%, and J&J up over 2%. Many of those, of course, good dividend growth companies like a J&J is a dividend king, having raised its dividend in its case over 60 years in a row. So good to see a lot of those types of stocks that we were focusing on late last year in the DGI class coming back to life. Now, again, we have no idea if this will last beyond one day. Maybe it's getting us excited for no good reason, but it is nice to see a bit of kind of rationality enter back into the market, because some of those were just getting beaten silly last year, and it's nice to see the bulls haven't completely rolled over at this point. Other areas that catch my eye here today, I mentioned the utilities. We had a great day out of the utilities. As I kind of hover here over the regulated electric utilities, you can see it was a clean sweep. I'm trying to go through all of them because there's a lot, but you can see all of them have a plus sign in front of them. Every single one of those regulated utilities in the green within the S&P 500. There was a utility here in the renewable space, Constellation, that was down 1.4%, and then there was one more here in the independent power producers industry, and that's NRG. It was down 0.87%, but I believe those are the only two. I think all utilities except for two were higher in the S&P 500 on a day when the S&P 500 was down 0.5%. REITs did well today as well. You'll notice that there's a lot of different REIT categories now after kind of that restructuring from the global industry classification standards last year. But you can kind of sense just by eyeballing it where my mouse is kind of hovering over that most REITs did quite well today. Some of those self-storage REITs like Public Storage and Extra Space Storage up over 2% today as just one example. And then you also had a lot of the consumer staples do well today. Again, number of well-known dividend stocks, right? Walmart was up today. It's a dividend aristocrat. Target was up today. It's an aristocrat. Procter & Gamble was up today. It's an aristocrat. Colgate was up today. Clorox was up today. Kenvue was up today. Kimberly-Clark was up today. Those are all aristocrats as well. And Church & Dwight was up just barely, but it's an aristocrat. Coke and Pepsi, aristocrats. So they did quite well. I could go on, but I think you get the gist. It was a good day for those dividend growth stocks that had kind of been left in the dust last year. And then you can also see kind of hidden within the communication communications area, of course, these days communications is dominated by the internet companies like Alphabet and Meta and Netflix and those types of companies. But the telecom companies are still part of the communications area, and stocks like Verizon and AT&T, again, big dividend-paying companies there, both up nicely today. You also had real strong performance out of many of the financials today. Not all of them, so it was a little bit more hit and miss there than some of the other areas, but still a very strong day for Berkshire and some of the other insurance companies. A lot of the big banks were up nicely here today. Citigroup was up 3% as one example. You had a lot of the brokerage houses out there like Morgan Stanley and Goldman Sachs and Schwab all higher here today as well. So a very interesting day to say the least, but the real theme from my perspective is what worked the best last year seemed to be exactly what got sold off today. And what did the most poorly last year was where that money rotated. So it'll be interesting to see if that theme continues as we head forward here into the rest of January. Also, by the way, I did post here earlier today on our website the dividend growth increases for all those that raise their dividends in the month of December. And then I also, over the weekend, posted the dividend stair-step sector statistics. We had a conversation about both of those in my dividend growth investing class today. But remember, those two posts on our website, you do not need to be a member to access. You do need to be a member to access my class, but not those posts themselves. So you're welcome to check those out on your own time. I'll even do my best to link them in the email I send you tonight regarding this market outlook video. All right, let's go ahead and get on over here now to the Thinkorswim platform. And wanted to show you from a breadth perspective that in the S&P 500 we had 261 stocks up today, which means that more than half the stocks in the S&P 500 were in the green, despite the S&P 500 being down by over 0.5%. Again, that is the Apple and Microsoft and Magnificent Seven effect that's taking place there. So had you just thrown a dart at 500 ticker symbols here today, chances were better than not that your dart landed on a stock that closed in the green today. Yet when you open up the Wall Street Journal tomorrow and look at how the market did here today, you might have had a different picture in mind as far as what you might have encountered. Moving on over here now to our 4 grid. This is chart 4B for those of you that are premium members that are going to be following along with me here. Reminder as well for those of you that were our beta members that joined us in mid-2018 and then renewed again with us in 2021. Your 3-year renewals will be coming up in the middle of this year, and we'll plan on sending out some information to those of you who are eligible for renewal discounts here within the next week or so. So be on the lookout in your emails for that if that represents your situation. Anyway, as we look at the 4 grid for the markets here today, the S&P 500 was down 0.57%. You can see that this is our second trading day in a row to the downside. However, it did not change the posture. Background of the chart remains green, and that's because the intermediate line is still in the upper reversal zone. It's falling, but because it's above 80, we would give it a little bit of a grace period there. So at the moment, we don't see a broken trend yet, but obviously today was a little bit of a wake-up call in the tech area. And given its importance, we want to make sure that we're paying attention to these things on a daily basis. So right now, no reason to pull the fire alarm or anything like that, but it was a noteworthy day for some of the key areas out there. So we remain with a strongly bullish posture on SPX. With Dow Jones Industrial Average, we actually hit all-time highs today, right? That's another thing I should mention about the S&P 500. We have now gone 2 full years without hitting an all-time high. Remember, it was the first week of January of 2022 when we hit an all-time high in the S&P 500, and despite getting very close to it last week, we did not ever get up and over that all-time high. So we've now gone 2 full years without a new all-time high on the S&P 500, but that is not the case for the Dow Jones Industrial Average. We hit yet another all-time high on the Dow today. In fact, the Dow was up today, right? That's the effect of having your Amgens and your Johnson & Johnsons and those companies that I had mentioned before, Coke and Pepsi and those types of companies higher today. The big blue chip index of the Dow Jones actually closed in the green while the rest of the stock market sold off here today. So nice to see that the Dow is providing a little bit of leadership here at the moment. Naturally, it continues to have that strongly bullish posture here as well. On the downside, or on the two bottom charts, I should say, we had NASDAQ Composite, which suffered the brunt of today's selling. It was down 1.63%. Remember, the tech stocks have a bigger influence over the tech-heavy index of the NASDAQ Composite. That's actually the third day in a row to the downside for the NASDAQ. You'll notice that the green line is a little bit closer to 80 than what we saw in the S&P 500 at 89, but it would still retain that strongly bullish posture for now. And then the Russell 2000 was down 0.7%. This was its third day in a row to the downside, but just like all the other indices, you've got enough wiggle room there in the upper reversal zone where we do retain our strongly bullish posture from an intermediate perspective on all four of these charts. All right, that's my 15 minutes. Remember, if you want to get me back on track with the hour-long videos, click like. As long as we're up and over 100 likes there on Twitter, be happy to give you 45 more minutes of my day. But if you like these shorter videos, then continue on with what you've been doing. Either way with me, I'm fine. So we'll let you guys decide there collectively. But David should be back with you tomorrow. I'll see many of you in the factor-based swing trading class first thing in the morning, and then I'll see the rest of you perhaps Thursday afternoon in this video once again. Until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.